afternoon, Peter. Thank you very much for joining us.
My pleasure.
Now, you're going to be speaking in a panel session shortly on market structure and HFT, and particularly the changes that that's going to be bringing.
Right.
So perhaps in a nutshell, you can summarise what those changes are likely to be.
Yeah, I think basically HFT is not really something that new. I've been in HFT pretty much since '93. So the new thing is only that now the regulator and the public has, put their attention on the topic, and for them it seems to be intransparent for the moment. So they're keen to find out what it's all about. In the essence, I think there's not going to be that much changes. The only main difference that you have that now more people can trade fast, and access to the trading tools to make fast trading happening has just become a lot easier. So the use of the techniques that basically been around for a better part of 20 years are getting more widely used, and I think this is one of the main differences that you see now. So that people just get more interested because it's easier to access those tools, and people need to and want to understand how to use them properly.
So do you think this is also why there's been this sudden influx of so many new regulatory, well, I suppose, concepts and soon to be laws?
Yeah, I think there's been a couple of widely publicized instances in the market, like the flash crash, and that has drawn, of course, the attention of the regulator, and they need to make sure that markets, still are able to operate orderly, and market don't get disrupted by people not understanding, not using the technology properly. And I think that's fair enough, but I guess the regulator really needs to sort of clue themselves up to really see what the problems are and understand where the issues are. And with regards to that, for the moment the regulatory focus has been really on the high frequency traders or the market participants, less on the exchanges. But really the most efficient way, for example, to improve regulation would be to look at the exchange side, because everybody has to go through the exchange with their order. So that's the central point where someone could make sure that no orders actually enter the market that shouldn't enter the market. So maybe that's something that the regulator has to work out going forward, where actually they should put the focus of their attention.
Well, this is actually goes back to one of the points that people were talking about earlier this morning, that MiFID II in particular seems to have come about in a fairly knee-jerk fashion, that perhaps that it's not really, at least as far as HFT is concerned, reacting to what's going on, but rather the hearsay, the anecdotes, and the general sense of fear about what could happen.
Yeah, I mean, the problem, of course, with most of the regulation is that usually it happens after the fact rather than before. So basically, if you watch the market, you see a problem, you're trying to correct it in the future. The problem is that for most people, the high-frequency trading side is reasonably intransparent. So you need to actually put in an effort to understand the market, how it works, so basically how HFT firms operate. There's no real, I think, market-leading HFT firms that have come out in the last 1 or 2 years, because it takes a while to understand, how that part of the market works, and what tools and techniques are used there. And that's why, of course, it's difficult to do proper regulation if it's a complex subject. I mean, you need time to get to know the subject, to talk to the people involved and understand it fully. But if you feel the pressure from the political side and from the general public to do some regulation, of course, you have to do some kind of shooting from the hip, and you have to implement something. The good thing is that, of course, none of the regulation is set in stone and can always be modified and corrected going forward, which hopefully will happen. So
you're not a big fan just yet of where it's going?
No, because I think there's a couple of issues, for example, ban on naked access, things like that, that basically create inefficiencies in the market. If you say, okay, some people can go quicker to the market and some other people will be slowed down, that's not creating a level playing field. It would be much better to say, well, okay, we allow everybody the same speed of access, but we make sure that at a central connecting point, for example, an exchange, there are sufficient pre-trade risk checks in place that whatever is sent to that marketplace is not able to disrupt the marketplace, and to approach things like that. I think that would be more efficient, because if you just do partial regulation for certain people in the market that affect certain people in the market, and that creates inefficiencies, then potentially you're not making things better, but you're making it worse.
But could this also be, as much as people saying the regulations are knee-jerk, that also that anyone that's going to be affected by them is inevitably going to have a fairly negative viewpoint of those regulations, that they're going to come in, but they're not going to want to adhere to them.
No, I don't think so. I think if you, by and large, talk to the leading companies in the HFT field, then most of them are very supportive of good regulation. Most of them, fairly interested in talking to the regulator and fairly open to talk to the regulator about the issues. It's really in the regulators and exchanges court the ball to pick that offer up and basically talk to the market participants. I think everybody has an interest in a functioning market. In a properly regulated market, so I don't think so that it's a general sort of like aversion against regulation. It's basically an aversion against uninformed regulation, but not against regulation in general.
So where do you think that disconnect has come from? Because I know that on the one side everyone's saying, well, we want to be heard by the regulators, and I know that in interviews that I've done in the past, the regulators themselves have said, we'd like you to come forward, please do, with this is how you can get in touch with us. So somewhere that hasn't worked.
Yeah, I think it's fairly difficult, and I see that from our own experience. Talking to the regulator, really the regulator kind of has to come to you. The regulatory bodies are usually pretty big organizations. It's not really clear who's making actually the decisions. So it's very difficult to actually influence that regulation, from your own side, that you say, well, okay, actually I go to the regulator and try to educate them. I think really that it's the ball is in the regulator's court, that they really have to go to people and say, well, okay, this is important that we get this right. Let's talk to all parties involved and not wait for people to come to them. I mean, after all, that's their job to understand the market, right? And if I have an information gap, then I need to rectify that, and I need to procure the information that I need, right? I mean, it's like in school, right? I mean, you have to ask the teacher questions. If you're just sitting there and never asking a question, you can't expect, to gain as much as possible out of, any course, any lecture that you're sitting in.
So, do you think it is now, given that we're at this just about post-draft stage, is it too late, do you think, or do you think it's still possible to recover?
No, I mean, you've seen that as well, for example, with transaction tax, I believe in Sweden, where initially they adopted a measure like that and then basically realized, okay, it's not good for liquidity, it's not really generating the revenue even that we expected, and then they just canceled it. And I think that's what you might see with some of the regulation. Of course, it would be better to first think and then, regulate, but, everybody makes mistakes, so that's, I guess, natural part of life.
Are there other things that perhaps occurred to me in the discussions that we've been having, that maybe the problem is that the regulators are trying to not just over-regulate, but it's the fact that they are regulating rather than allowing the industry, which obviously knows what it's doing, to regulate itself and simply close those loopholes, because it seems that most of the big headline-making issues, the ones that have caused these crises, are people exploiting loopholes that shouldn't have been there.
But that's always a problem with self-regulation, right? I mean, there's some kind of adverse incentive for some people to, not, follow kind of sensible rules because they see loopholes that, not illegal, but, exploitable. On the other hand, to be fair, I don't really see that on a large scale, that really people trying to exploit legal loopholes. The whole publicity comes from a couple of accidents that mainly been caused by people that have not been in the market for a long period of time, that didn't put proper attention to making sure the systems are okay, the systems are checked, that didn't use enough safety checks, enough sort of like investigation into how the strategies actually work. And by and large, the people that have been in the business for 15, 20 years, they're usually not the ones disrupting the market, and the ones that really drive the market are usually the ones that don't cause problems in the market, because they have proper procedures in place to make sure, okay, their strategies are checked and safe to run in the market, and their goal is not to exploit legal loopholes. I mean, they're trying to take advantage, of course, of inefficiencies in the market, but I think that's fair enough, right?
Fair enough. That is fair enough. So finally then, over the next few years, how do you expect to see the landscape of high frequency trading changing, especially as people have been talking about things like social media connectivity and new ways of communicating? Yeah,
I mean, there's definitely new possibilities. I mean, now that people start to use, as you say, social media feeds, news feeds, we've been looking at that actually already over 10 years ago, but then back then it was very difficult because you didn't really have the high quality of feeds and the high speed of feeds, and sort of like the structured feeds, in the sense that you can use it right away. I mean, you would have to basically subscribe to a text and then interpret it and filter it and manipulate it yourself. And now you have service providers like, let's say, Dow Jones, that basically offer that to you. You can buy that as a service. So that will change things. The other thing that will change things massively is that it's so easy to access the tools necessary. In the old days, you needed to build everything from scratch. It was very expensive. Now you can open an account for very little money at a brokerage firm that might give you tools and access, which allows you to write high-frequency strategies. And that might be done by students in the evening after the coursework. And those strategies are good with very little capital. You might be able to generate fantastic returns, and then people will be interested in those strategies, invest in those strategies. You might have completely new competitors in the market coming out of nowhere just because they have the intellectual capacity and sort of the ingenuity or creativity to come up with completely new strategies. So I think that will change a lot. In the old days, you couldn't really compete unless you were an old established organization with a lot of capital. But now these days, basically, even with a little bit of capital, but a lot of brain power, you can compete, and I think that will completely change the market. But that's good for the market, because then basically, it's breaking down barriers, and it creates, a more level playing field for everybody. And I think that's
it's always good to hear a really positive outlook. So thank you very much for taking time to speak with
us. My
pleasure.
pleasure.
And I'm very much looking forward to seeing you right over at those seats in the next few minutes.
Yeah, my pleasure. Thank
Cheers.
you very much. Thanks.